Hey, what's up everybody? This is Evan Karthi from evankarthi.com. Today we are going to look at a day trading setup, or actually a setup you can use on any time frame. It's going to go along with the post day trading setups for maximum profits. This is a series I'm working on where I'm going over all of the current setups that I'm using. And so this one, what I call is the 78.6% trade. Not very original of a name, but it's working out very well for me. So I want to share it with you all because I put everything out there, what I'm doing, good, bad, and the ugly. So from the post that this is going to be going towards, I'll link below in the video as well. This video is to reinforce it just because I know it can be a little bit confusing when you only have standard charts with the post. So hopefully this video helps out with it. So what we're going to look at right here, we're going to use a couple examples and we'll just go over step by step, just the way I showed it in the post, and then we will go over here in the video. So for the 78.6% trade, what you have is, what you're looking for is, you're looking for a low. Obviously there's low right there. Price comes up, we'll use that high right there. You can see it right here. There's the high of it right there. And then we're looking for the retracement. So price is coming back down, hits the 78.6% trade. So what that does right there, once it does that, that is the first step of what we're looking for to solidify this as being a 78.6% trade. So again, you have the pivot point down here, the bottom yellow circle. And you have this one right here. There's the high right there, the top yellow circle. Price comes down, it hits the 78.6% line. Then from there, what you're looking for is price to go up and hit the 123.6% Fibonacci extension level, and that is the yellow line right here. And you can see it does do that. So this is a valid 78.6% trade. So what we're looking for when it does all of that, all we do is take the previous anchor point high, pivot point high, whatever you want to call it right here, and we just keep dragging it up until we get a deep enough retracement that where the 78.6 line, which is the purple line down here, gets hit, because that'll be the first entry. So we use that as a pivot point high right up here. Let me move the circle over there. So that is going to be the current high. We'll just shrink this chart a little bit. Going down, okay, there we go. See down here, we'll price hit the 78.6% level. That's going to be our first entry. So what I like to do when I have these entries, so I can mark the entries and exit, I draw a little box. So the first entry down here, 78.6% level. The exit's going to be at the top of the box right here, which is at the 50% level. And so that's the first one. So if price had hit the 78.6 level, which got us in the trade, and then went up and hit the 50% level, then this trade would be over. Obviously that didn't happen. Price kept on going down. So let's see what happens. So when price kept on going down and hit the 100% level, which is a blue line down here, then we do move the exit. And so what we do is we move exit down to the 78.6% level right there. So that is the new exit. So the first entry is the 78.6 level with the first exit in the 50% level. The second entry is the 100% level with the second exit that we moved the original exit to, the 78.6% level. Now, the way I trade is I always have my exits slightly below the Fibonacci levels, just to ensure I get out, because I've seen it plenty of times when price comes up, will tick the exit, the Fibonacci line, to get you out of the trade, but it wouldn't have been enough volume to get traded to get you filled. So I'm always getting out a little bit early rather than trying to milk every last tick for it, because the way I trade, you're going to be in profit enough to where getting out tick 2, 3, 4, 5 early isn't really that big of a deal, because you're going to be in such big profits. So once that happens, price is 100% level, exit moves down to 78.6. And let's see what happens if it comes to get filled or keeps going down. It's going up, and then it just drops out. No big deal. We got this covered. Not a problem at all. Get rid of that ad right there. Still going down. You see it retraced down some, but never came back up and hit the 78.6% level. So we are still in this trade right here. And then price goes down and hits the 261.8% Fibonacci extension level. So this is the last time the exit's going to move, because when price hits that level, you can see I already have the blue box drawn right there. We move the exit to just below the 100% level at 1.1086, and that is the last time we move the exit. So even if price continues to go lower than the 261.8% Fibonacci extension level, no big deal, because the exit, you do not have to move again. So that is why when I put on a post, I try to wait for price to come down to this level to get in, because once it does, it's going to put you in big profits when eventually price does go back up. Yes, there have been times I've gotten in at the 78.6% level, the purple line up here, and it goes up, hits 50, gives you a nice gain right there. But if you're looking for the really big winners right here, this is what I recommend doing right here. And also, if you're looking at getting in these other trades up here, you kind of need a bigger bank account too, because the drawdown can be a lot, as you can tell the way this trade works. So, excuse me. So when price hits to 261.8, we move the exit just below the 100% level, and that's the last time we're going to move it. So let's see what's happening. And this trade right here is one I am currently in. And so see, I'll just show you here real quick. I think like $12 or something before I got in. I didn't get down all the way to the 261, but yeah, 11.25 right there. I didn't get in perfectly down there at the 261.8, but got in pretty close enough. So when price, I see price coming going down, kind of stalled out down here, and now has been in an uptrend since. So exit I'm looking up for here. You can see where I have my exit right here, just below it. Say the hard exit's about at 1.106, out of mine at 1.108. So I practice what I preach, and looking to get out a little early when price eventually comes back up there and hits that. So that's one example of the 78.6% long on the 15-minute chart. We'll look at a short example, at least one or two more examples. So hopefully this gets kind of reinforced pretty easily. All right, so this one's going to be a short example right here. This is going to be from the S&P 500 in a futures continuous chart. This thing needs to be adjusted down here. All right. So let me go ahead and adjust this a little bit. All right, so here is the original moves that we're looking for. Here's the pivot point high that highlighted in yellow. Here's the pivot point low that highlighted down here. You can see price came up, hit the 78.6% level right here, right at that purple line right there. Then went down here, hit the orange line at the 1.236 Fibonacci extension level, excuse me, 123.6. You can see down here it's negative 0.236, but to get the negative Fibonacci extension levels going the other way, or to get the Fibonacci extension levels going the other way, you have to put a negative in front of it, and then you have to subtract one from it for whatever reason why, but that's the way it works out when you're going the opposite way for it. So price comes down here and hits it, so that is a legitimate trade. So what we'll do right here is I'm gonna move this over here for that being the pivot point low, and then go move that Fibonacci retracement level, make that the new pivot point low. So now what we're looking for is price to come hit the 78.6% level to initiate the trade. You see price does come up here and do that. So I'll draw the box right here. So that's gonna be the first short level right there at the top of the blue box, so the purple line. Exits down here at the 50% level at the red line right there. Let's see what happens. Price is going, getting close. Nope, now going back up. All right, goes up there and hits the 100% level. No big deal. Just go ahead and draw that box over there a little more. So now we have the exit down here at the 78.6 level, the purple line right there, and that's about at 29.3225 from 29.35. And this is using the 15-minute chart. So see what happens. Okay, price is just going away from us, and you probably saw a little bit before what happens there. It goes quite a bit far away from it. So there we go. It hit the 2.618. So that's the last time you'd be looking at moving the exit down here, which the exit would be 29.35, and you would definitely be looking to get in right here at around 29.56.75. So let's see what happens. Price keeps on going up, and this is another Fibonacci extension level I like to use as well, the 423.6 extension level, just because I see a lot of action off of it, especially from this trade. And I do look to get in here as well, to enter up here as well if price does go up there. So I would be looking to short right here. This isn't a trade I took when it was going on, and you can see price is going, going, just kind of waffling around on it. Again, the exit doesn't move, even though it hits a 423.6. You're still at 29.35. So if you said, like, you know, hey, first short was right here, 29.56, second one was around 29.78, you are going to be in a lot of profit down here at 29.35. And again, that is why I do try to wait for a price to get back up here as a first entry at the 261.8% level. Now, obviously what that does mean is there will be plenty of trades you'll miss when price does hit the 78.6 and it's the 50, or it's 100 to the 78.6. I'm not going to show all those. There's a ton of them. I just want to show some of the extreme examples to how this trade setup works. And so there's price going around, there it goes. It's finally going back down. And let me show you something right here. This is what I also like to look for when you get a big move like this. I look for a trend line break right there. That looks pretty good as a trend line right there. You see price came, broke out, use that trend line, the former support, as resistance came up or hit, went up a little bit higher, but that was basically it for that move up at that level. And then price did come down, hit the 261.8, but still in the trade. Goes up a whole lot higher. You're thinking, oh, this trading gonna work, I'm below my account. No, don't worry. Just watch what happens. Look at this, and look what it's creating up here right there. This is obviously one that took quite a bit of time for it to finally complete. It's creating a channel up here. Don't worry about it. This is going to come back and get completed. This is one thing I was talking about in some of my weekly recaps. I was doing the S&P 500. I expected more downside to the market. And then you start having these big moves, and here we go. We start having big dropouts for it. Let me remove these things. We don't need those anymore right there. The channels. It's going down into it, and then bam, look at this week right here. It goes on and takes it out. No big deal, so don't worry about it. Yeah, it definitely did get away from a little bit, but hey man, you have to trust your setups. The reason why I trust it, created it through meditation. This is something I use, something I like. You don't have to use it at all. I just want to show you how I'm trading. Hopefully that can help you when you're creating your own trading style, your own trading system. But price comes back down, takes it out, no big deal. So that trade setup is over right there. So yes, that one did take a while. First initiated back in about September 19th, didn't complete until October 19th. So it took about a month to complete. But as you can see, say if you got in at 29.78, 29.80, and then you're getting now down here at 29.35. That's going to give you pretty big gain right here. So can use it for swing trading, day trading, 15-minute time frame, 5-minute time frame, even day trading, because I also use this for my look and trade stocks, which I normally use on the daily chart, sometimes also 1 hour, 4 hour, also Forex, which I use 1 hour, 4 hour primarily, and then my cryptos, which I either use 1 hour or daily. So use it all. The main charts, my 15-minute, 1 hour, and daily, which is for these, for instance, where I traded my futures, I'm looking at my what's it called, 15-minute chart for trend futures. So here is one I am in right here. This is something I had been looking for, and I am extremely proud of for where I got in for it. So just want to show that one real quick. See right here, this is just trading a micro contract right here. So I actually got in a whole lot better than even the 423.6 of the 261.8 right here, which I'll show you why here in just a second. But for the context of this video, this is the 78.6 trade. So let's just go over, let's see here. Let's go over this trade here real quick. So you see we have the swing low right there, that little candle right there. I won't zoom in too much for it, but that's it right there. There's the swing high, price came down, hit the 78.6, and then went up and hit the 123.6% level, the orange line. So now we just continue to take the Fibonacci retracement level, draw it up higher, waiting for the 78.6% level to come down and get hit. Let me draw that down one more tick. There we go, perfect. So you see price came down, just blew completely through it, didn't even stop right there. It didn't even stop at the 100 and was just going down, 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 down. So not until you started seeing a little bit of pushback or fight back was until price hit the 261.8. So at that time, that would be the last time you move the exit, where it's currently below the 100% level. And again, you can see how my take profit level, quite a bit lower than the 100% level right there. It's about at 29.7350, and my exit is at 29.69. Because I have no problem getting out early to ensure I get out of it. So anyways, Price came down, hit the 261.8. Continued to go down, hit the 423.6. Finally found some support. Broke out of that downtrend line right there that I drew on it, broke out of it, came down, used it as kind of support down here rather than resistance to what it had been, and ever since then price has been just skyrocketing up. So to be honest, right now this is Saturday night, October 5th 2019 when I'm doing this, I will be looking to get out of this trade when the market opens on Sunday for it. This is a good enough profit for me right now, and if price does well, here, let me just show you. There is this trend line right there. So what I am looking for is price to come back down to this trend line, closer to it. You know, I may miss out from about 29.50 to 29.69 on that profit right there if the price does go up there and hit it. But like I said, I'd rather, from where I got in right here, I'd rather just lock in this profit right now. If I give up that right there, hey, it is what it is. I'm still extremely happy with this trade. But if price doesn't go up here and hit this blue line 100%, in fact, let me put the profit rectangle on there. Price doesn't go up there and hit it, and we do get this retracement that I do think is going to happen, come back to this trend line, hopefully before it's the 100% level, especially down to about the 261.8 level. I will be looking to get back in this trade and then ride it up to the 100% level. But the main reason why, I'll tell you what, let me switch over to this hourly chart. I know this video is running real long, apologize for that, but I just want to go over a couple things. All right, there's a 8.236% trade right here that we were looking to get filled. That's the first entries at the 8.236% level, the exits at the 5.236. See, price just kept going up, going up, and so I was looking for this to be complete because the next exit or entry would have been the 22.236 Fibonacci extension level. Never hit that, so the exit doesn't move. So that's where we're currently looking. So when we had this breakdown down here, I did think about getting in right here at the 261.8, but I was pretty confident that price was going to continue to go down and probably fill this trade. So I was looking at getting at the 423.6, but once it just completely blew through that level, I just literally put my exit right down there on the exit. You can see price just ticked on it pretty much perfectly, and it broke out that downtrend line. Use the trend line as support. Now it's been taking off ever since. So proud of that trade right there. Just want to show that out again. Not you know, huge money. Again, this is just trading the micros. These aren't even the minis. These are the micros. But you know, got in down at 28.76. Price is currently at 29.50 and change. So anyways, that is the 78.6% trade. I will do another video. I know this one is another setup, the 8.236% trade. I'm gonna do another video, another blog post about that trade, because again, that's another trade that I do use as well. And then also one other one that I use, it's called the springboard trade. So basically I got three main ones I use right now, and that's to continue to meditate, create new trades, and my trading continue to evolve. You know, other things will pop up, but those are the three main ones I use right now. And the 78.6% trade for day trading, swing trading, position trading, whatever I use it for, is the main one. So anyways, take care out there, and see y'all later. Bye.